My name's Austin Williams. I'm a wealth coach here at Better Wealth. And today we're going to be looking at the importance of your health and how your health can affect what your policy looks like and the performance of your policy over time. Now, if you're new to looking at life insurance, this is actually probably something you've come across before is that you're going to get like some kind of a medical exam or something. And in truth, some of you will, some of you won't. Depending on how old you are, it may be more or less likely that you'll ask to get one, but it is absolutely unequivocally true that your health will affect the performance of your policy over time. And I prepared this short piece of content to kind of show you what that looks like. So, what are some of the different health ratings you can get? So, depending on what kind of policy you get at a carrier, you're going to have a health rating that is attached to that. And at pretty much all the carriers, they all follow the same pattern. There's like the best, which is like extra good, no smoking, very best. And then there's like a middle one, which is like good, no smoking. And then there's like the middle of the road, not good, not bad, standard, no smoking. Then there's like a slightly subpar, like a good smoking. And then there's like a standard smoking. And standard smoking is the lowest health rating that you can get before you get into something called table ratings. And table ratings are, they can be for either smoking or non-smoking. And it's like where you're not quite like, it's not just the fact that you're smoking or non-smoking that's affecting you. It's like you also have other health conditions. You might have diabetes, you might have like a history that the carrier has been made aware of, blood pressure, like there's literally just so many things that it could be that is going to drive your rating down even further. And the more complicating conditions that you have, the lower your rating will be. So if you have a table rating, for instance, 2, that means that there's standard no smoking, and then there's standard no smoking table rating 2. And if you have a table rating 4, that means you're not table rating 2 or 3, but you are table rating 4. So as it gets lower, it kind of gets like, that's basically there are more complicating factors and the price of insurance will go up. Now, let's look at what a standard non-tobacco overfunded style policy would look like. So this guy, 45, standard non-tobacco, middle of the road health. If these 2 columns on the left here are the minimum required premium every year. And then the paid up additions are what can be paid on top of this. And so the lowest that I was able to build this guy at this carrier for his minimum required premium was about $11,350. And I'm going to go back so that you can see here. And if you bring your eyes down to row 20, and then you go over to where it says total cash value, that's where I'm going to pull this from. You see the total cash value and then the total death benefit on the right-hand side is that if this guy paid $50,000 a year, and this is a $50K maxed cash style policy at a standard health rating, he'd have $1.623 million in cash value and $3.13 million of death benefit in year 20. So that's going to be what we're going to compare the next 2 things against. All right. Now let's say he had the best health possible, preferred plus non-tobacco or extra good or, whatever the other carrier has. So in this one, you'll notice that these numbers are now smaller. And it's because as your health rating goes up, the minimum required amount of your premium goes down. It costs less to insure you because you represent less risk to the carrier. So these 2 numbers added together are lower. And then if you go down to line 20, go over to the cash value and the death benefit again, it's $1.678 million in cash value and $3.226 million of total death benefit. So total required minimum premium is $10,427, which were that red box and those numbers added together. CV 1.68, death benefit 3.23. And the difference from standard non-tobacco is $923 less of annual base and term, $55,000 more of cash value, and $100,000 more of death benefit. And most of the people watching the video, that makes them excited. They're like, oh man, like that sounds great. Nothing about the policy changes. All the numbers stay the same. The amount of premium contributed, everything is the same, except you're just healthier and the policy is going to be more efficient as a result. So that's a win-win. Now let's imagine going the other direction. What would happen if not instead of becoming healthier, you became unhealthier? So that'd be like a standard non-tobacco table 4, for instance. So as you see over here, highlighting what the minimum required premium is in the red box. And then on row 20, you're going to go over to cash value, which is $1.43 million, and then the death benefit $2.75 million. So total required minimum $14,000. And CV year 20, 1.43, death benefit 2.75. So the difference from standard non-tobacco is $2,650 more of annual base and term a year. By year 20, there's $188,000 less cash value and there's $374,000 less death benefit, even though nothing changed. Your behavior stays the same. You've made the same consistent premium payments every year for 20 years. You're just less healthy. Now, what's the upshot of all of this? So, your health rating is an indicator of the amount of risk that you represent to the carrier, and you're going to pay more for the same amount of insurance as your health rating gets worse. Now, your health rating impacts the required minimum needed to fund a policy at a given age. So, the better your health rating, the more paid up additions that you can add to your policy for the same amount of base plus term insurance. So, get off the couch, hit the gym, be as healthy as possible. If you needed a financial reason to get in shape, let this video be your guiding light, right? So, make sure to safeguard your health, one of your most important assets that you will ever have, possibly one of the, if not like the most or the second or third most important asset that you ever have besides like your family, because this is the one thing that, honestly is going to allow you to live most intentionally both now and in the future. Thanks so much for watching. If there's some other of our content that you'd like to see, please click on that too. I'm looking forward to seeing you in the comments.
If you're a high-earning professional, entrepreneur, or just somebody who wants more control of their money, we offer something called a clarity call. It's a one-on-one conversation where we look at whether or not overfunded whole life insurance could help you build a safe, liquid, and tax-advantaged foundation to help you grow your wealth. Now, there's no pressure or fluff. We're just looking to get real clarity on whether or not this strategy aligns with your goals. So click the link in the description below or hit the tag comment